All right, folks, welcome back. Here's our weekend commentary for the SAT Mentorship. And I did this video earlier. And I talked for about 25 minutes. Thought I ended it well. And realized the entire time my microphone wasn't plugged in. So I hate that. I've done that so many times, at least a dozen times. And I say it like it's a lot, but a dozen times I've done that since doing these mentorship videos. And it's so deflating because I'm thinking, okay, I'm done. Now I can just do my copies and then I can enjoy my weekend like you all do. No. We can't do that. We got to have a little bit of Murphy's Law. Whatever can go wrong, it will. Okay. Whatever. It's Friday. Thank the Lord. So we were looking at the dollar indexes, our daily chart. We have the SIPI here, sell side amounts, buy side efficiency, the premium high, discount low. That's what these blue lines are, okay? So when we drop into a little closer view, premium high, discount low. On the YouTube channel, I called out a significant turning point, expecting the 99.92 level to 99.95 level. I did it by eyeballing it, and I explained in honesty what I was looking at, but I slid in a little comment that one of the viewers actually made a snide remark saying, I guess he's rolling his eyes because I said I know things and I teach you all things and concepts that help us nail down the very low within 2 or 3 pips of the daily low and daily high. That's not for YouTube, okay? It's just for you all here. So I'm going to teach you that, obviously, and give you the nitty gritty in regards to that. But they all got a chance to see what it's like to be here, like you all. Each week I outline certain things and we get the privilege to see if it works or if it doesn't. And most of the time it works, and they got a taste of that. So I needed to do that because there's a lot of people that talk a lot of smack about us as a community, as me as a mentor, and take aim at what we're doing here. And there's people that believe that stuff that said, so I basically, put it out there. I know by doing those things, they'll want more of that. And that's why I tell them all the time, I'm not going to do more than what I'm willing to do. I'm obligated here. I'm not obligated there. So, but I had a lot of fun this week. I got to tell you, it was very fun. But let's go into the retracement here and back up into the relative equal highs, which was just beautifully delivered, like really beautiful. It's almost like we know tomorrow's newspaper. Doesn't it feel like that? It's amazing, isn't it? It's the closest thing to fortune telling or time travel. And it's enjoyable for me to be able to share this with you all. And to them, it's like magic. It's like, David Copperfield performing sleight of hand. Here, it's business as usual. I mean, you're not impressed with that. You see this kind of stuff all the time. But it's just fun seeing everybody light up and get excited about it. So the hourly chart here, obviously the buy-side liquidity I mentioned, that was the likely draw on liquidity. We were in here. I said we would draw down into 99.92 to 99.95 in that vicinity. I explained to them that was the imbalance level here. And that's fine. There's nothing wrong with that. There's absolutely nothing wrong with that. But you know how it is around here. We like to take things to the furthest of extremes and precision. So the level here is consequent encroachment between this premium high and discount low of the imbalance on the daily chart. That's what that is, okay? So I mentioned we would dive below 100. We got that. I gave them 99.92 as a low end objective. We got that, but it went a little bit below that, okay? We like to look at the imbalances over here as well because this is a nice deep discount here. And if we're going to go beyond consequent encroachment, because essentially that's what I was aiming for, but for elements of precision, just below that, you want to look over here inside the range. What range? This low to high. What do we have in here that's a discount array? Well, we have this, obviously, I mentioned that, but over here we have this. So we're utilizing the consequent encroachment. That was where I was taking everybody's attention. I didn't think we'd come back below that low. Why? Because it's bullish. I don't think it's going to come deep into this. Why? Because it's bullish. So it's going to come back down into institutional order flow intradrill. just a little bit below that, there. So you're looking at the consequent encroachment level as the magnet, if you will. It's like the draw where price will go, but it's obviously likely to go through that sometimes. How do you know how far? Over here, institutional order flow entry drill. That candle's low, right below it by 1 pip or a pipette or whatever, and then turns on a dime, comes back up, and then finds some support at consequent encroachment, and then rallies, consolidates, rallies, consolidates, rallies, consolidates, and rallies. What do you see here? Market maker buy model, right? I'm not talking about market maker buy models in the mentorship on YouTube. I did teach them in old videos, but that is not going to be amplified there like what I taught you in this mentorship, which is what I'm going to revisit here now. So we have the consolidation, original consolidation. We break away from it, come back up into consolidation. We have that fair value gap in the form of SIBI, sells off. So we have distribution, smart money reversal. Wow, so you guys got a chance to see not only the smart money reversal forecasted by me, you also saw the London Open setup forecasted before midnight using what I'm teaching you in this mentorship, not on YouTube. Smart money reversal, low risk buy, accumulation, hits the order block, rallies, second stage, reaccumulation. That's where the big dynamic move happens. Oh, look at that. Boom, takes off. Shallow run above the buy side liquidity, retraces back down into some random level. Tongue in cheek, I'm going to come back to that in a minute. And it rallies deeper above for the buy side. Now let's take a closer look with all this. These candles that are going up, that's your distribution level. So where there was distribution on the sell side of the curve, remember everything at the smart money reversal to the left on the market maker buy model is the sell side of the curve. Everything to the right of the smart money reversal is the buy side of the curve. So you're going to match up areas of distribution on the sell side of the curve with accumulation on the buy side of the curve. And that's what you're seeing here. We're going to go down to the 15-minute time frame. You'll see it. It's important there. But just on your chart, I didn't want to do it because I want you to do it on yours. These up close candles, make that a rectangle, shade it, and extend it out over. And you'll see it digging into that. And then accumulating and running up for the buy side liquidity here. Here is that retracement down in for that return back into an old area of distribution, now becomes accumulation. And it also answers why the market isn't trading an optimal trend entry from this low to high. Why didn't it go down to 62? Why didn't it go down to 79% retracement level? Why didn't it go down to 70.5 level? Why isn't there an optimal trade entry? Why didn't it fill in all this? Because it doesn't need to. Because on the higher time frame hourly, it has a market anchor buy model. And this is entering an old area of distribution, now becoming accumulation. That's why also you cannot look at levels like this and think, okay, this was resistance. It's been broken. Now it's going to come back down and hit that as resistance turn support. No, that's a fallacy. You have to look at what I'm teaching you and apply it in its proper context. And the proper context is going to come by way of experience. Unless I've, physically took your attention to it, you're going to have to grow in your own experience. And yes, it's taking time, folks. It takes time. You can't learn this stuff. Watch a video, go out, and there it is. And it doesn't work like that. Okay? You didn't ride the bike the first time you got on it. You fell off. You skinned your knee, elbows. It was hard to do first time. Like anything else, this is a honed, acquired skill. And that's my job here. I'm lending you my experience so that way you gain your own. And once you have it, you can't lose it. No one can take it from you. Okay? I can't recall it and say, hey, I don't want you to have my, my experience now become yours. You have it now. It's yours. It's the gift of being with me. All right. So we're at Eurodollar. In case I haven't mentioned I don't think I mentioned it. The next upside draw is 102, and then maybe 103. Maybe we'll get that if we get some extrapolation on the upside for dollar. So basically, still bullish on dollar. That means we're still bearish on euro. Euro dollar daily chart. I mentioned we would get sloppy in here, and man, is it? It's just a mess. But this is the next draw on liquidity. I think we'll get down there, especially after what we've seen in cable today. It may want to catch up with that one. But lower prices on euro is what we're expecting. And just go back into that chart. Here's that run on previous week's high, taking out the buy stops. Breaks down, institutional order flow entry here. Breaks lower, consolidation. Rejection block is the only thing that's really noteworthy in here. Then it breaks down, creates an imbalance. Bearish order block, runs right back up into it here. Really, really sloppy in here. And then sells off. Fills in this area here near the close. And we'll be looking for a sell side here and here to be taken out. And then the level I mentioned on the daily chart. That's our next downside objective for euro. 15-minute time frame on the euro dollar. And I mentioned the imbalance here as a downside objective. In this mentorship, obviously we know that if it breaks below it and it's still bearish and narrative is looking for lower prices, it goes up into that area, picks up more orders, drops back down, runs sell side, and then we consolidate up into the imbalance here. I'll be looking for a gap lower opening on Sunday. That's my preferred setup for Sunday. Not that it will invite me to take a trade on Sunday, but I'd like to see it open lower with a gap lower, then fill in the gap and then proceed to go lower. That's what I'd like to see. British pound versus US dollar daily chart. All right, here we go. Relative equal lows. I mentioned this, I don't know, about a month and a half ago or something like that. It was in your notes, obviously. So if you've been keeping tabs on what levels we're looking for, what draws of liquidity, this is the one, and then the next one's down here. Okay, and it did it all in one day. So let's take a closer look here. So we had a little bit of optimal trade entry here during some really nasty consolidation, just not wanting to move. And all of a sudden, one day, big decline. Like, that's nice. These type of moves are very fun. But if you're not prepared for them, they can take you off guard. And also, as I'm going to show you here, it's really hard to get in them. Usually it's the previous day that provides the entry. All right, so here is that very scenario here. A little bit of imbalance, buy side here. Muddy. Nothing was in the chart when I was talking about it during the recordings. And then we had the break in market structure here, which is obviously after recording. And then runs up, gives the filling of the SIBI in the form of this fair value gap here. Bodies telling the story. Consolidate, and then in one candle, just completely runs right below here and just melts. Unless you were in back here, you're not in. You're not in it. Okay, and these types of moves are what I'm referring to, where because of the elevated risk right now, I know it doesn't sound sexy, it's not fun, it doesn't feel like it's a conversation point that you want to have when I talk about these types of things. And I'm not going to go on some tinfoil hat rant, okay? I'm just reminding you that all the war and saber rattling that's going on, remember I told you about China, now it's about the kickoff too. They're going to be doing their thing with Taiwan. So here it is, you know, a year later, or a year and a half later, you know, the things we're talking about here that a lot of you don't want to hear about are becoming a reality. And that is going to reverberate throughout the marketplace. And it creates risk on, risk off extremes. So you get these types of moves where you just can't be a participant in them. And if you're on the wrong side and you're trading like without a stop loss, it can absolutely ruin you. And that's the reason why I tell you these things, okay? I'm not trying to be Nostradamus. That's not my thing, okay? I need you to understand that these environments are very, very risky. And if you're not paying attention to that level of risk, you're going to take on larger trades, trade without a stop, or just get fast and loose, and you won't see these things coming, and they'll hurt you. And it's very, very easy to ruin yourself and not be able to come back from it emotionally, psychologically, and financially. But everything here just completely melted after the previous day's setup here. They held it in consolidation, and then boom, there it is. Now, this is not the algorithm breaking, okay? This is not them saying, oh, ICT is teaching, so now we're going to change things up. No, that's the result of the type of environment that we're in, okay? So whenever we see this in the future, like when I'm no longer around and I'm not holding a hand on the mentorship commentaries, anything can happen, folks. You need to be thinking about how are you going to be looking at things. And that's why I teach the way I teach. I want you to be mindful of it. But these types of scenarios will happen and you won't be able to participate. They'll just run and you won't have a chance to get in, as you'll see in the 15-minute time frame. Here's midnight here. Just a small little run up. Nothing exciting. No real extrapolation to the upside. And then just melts. Rolls right over. Is there institutional order flow entry drill in here? No. A fair value gap? No. How about a short-term high running the buy stops before dropping down? Nope. Just completely folded and fell out of bed. Running to this level here, that I gave as a downside objective, I don't know how many weeks ago, a month or so, whatever it was. The only thing that was noteworthy here is the only up close candle in this decline, bearish order block. It runs up into that and then wilts one more time. Small little fair value gap, revisit. Or does it? I don't even know. My eyes are not that good anymore. And I just got my eyeglasses updated. So my eyes are really, really troubling me. So double check that on your own there. But it looks like it got at least to the same high, but don't take my word on that. Double check that candle here. And then consolidate a little bit and then broke and just meandered around below that old low I gave as an objective about a month or so ago. Lower prices for the second objective on the daily chart for cable. Go back and listen to the commentary for the daily chart. And again, that's where I think it's still going to likely go. That's assuming, obviously, the dollar index goes to like 102.50 to 103. Okay, because that's where I think we're going next. 102, 102.50, and then 103. All right, that brings us to the E-mini S&P 500 June delivery contract month for 2022. And here we have a very colorful array of lipstick. All right, so I mentioned in the YouTube channel, this was a bearish order block. So I had everybody's idea of looking for this candle to provide some kind of resistance. I mentioned in describing the candle that this level here, the low, the open, I did not do consequent encroachment. Mean threshold, what I did say, the close, and then the high. The high, I said, is the most unlikely level to be traded to. So now watch what happens. If this candle's high was higher than this one, we would be doing this consequent encroachment on this one. But because this next candle had a slightly higher high, you run your consequent encroachment numbers there. 50% of that, bam, hits it. Does not go to the top of the order block. So we run up into it, deep, deep, deep premium, and then they sink it. Now go back and listen to the commentary I gave you on the YouTube channel, and you'll hear me say we're entering an area in time going into May where I'm expecting bearishness, shorting opportunities, and looking for signatures that'll hopefully line up with that idea. Boom. Okay. If you look at what we have from this level here, going down, we have the volume imbalance levels here, the buy side imbalance, sell side inefficiency, consequent encroachment. I could have a lot more on here, that's what I'm trying to say. And then the order block. So it went to and through the volume imbalance and the sell side liquidity. The premium high of the BISI, the consequent encroachment of the BISI, the order block, and the discount low of the BISI. And it went even deeper into the order block here. I believe we're going below here and eventually here. That's what I see, that's what I think, and it's seasonally lining up for that. What I don't want to see is the entire thing just melt down in a series of 4 or 5 candles, and that's it. But that's the likelihood because of the conditions that we're in geopolitically and because of all the stuff that's going on. So I'd like to see an up day not completely come back up in. I don't even want to see it come back to that low. Everyone else is expecting that low to be revisited. I don't want to see that. I don't want to see that at all. It can make an attempt to do that, but I like to see it. You go up here, find resistance at the premium high of the old BISI. Hit that and then start to work towards that. That to me, I'm looking for that personally from my own trading. It may not deliver that. I may have to take something else, or it may not even do it. I may miss a move. I may completely, not be able to participate. It may just gap really far down on Sunday, fill in the gap, or leave it open and just keep on running to here. And anything can happen. Anything can pop off over the weekend. And it kind of looks like somebody knows something's coming. If you look closely, what do you see? Market maker sell model. Consolidation. Accumulation. Smart money reversal. Low risk sell. Distribution. Second stage redistribution. Biggest move. What is it keying off of on the buy side of the curve? The old area of accumulation. Extend that out in time. Fine tuning it with the consequent encroachment here. Bam, hits it inside of an order block. There, boom. Pretty wild, isn't it? All right, hourly chart. Hits the consequent encroachment of that daily candle and just completely falls out of bed. No retracements, no nothing. Just completely melts and attacks the sell side liquidity here. Institutional order flow entry drill here after consolidation. Hits it once more here. Sells off. Look closely. Look at how many times this thing rolls right back up on the previous candle. That's a lot of movement, folks, for E-mini S&P. It's coming back deep on it and drops. Comes back on it again deep and then drops. Comes back open, overlaps it again. Basically slightly higher close on that candle. And then we drop again, and the next candle we completely rebalance all that there. Sells off. The next candle, look at this one here. Completely wipes out the previous candle's high and then drops down here. And the next one just folds over. So inside of 2 hours, that's 60 handles or so in 2 hours. That's pretty neat. But it's a lot of them coming back and making sure nobody gets a chance to be a participant in it. Nobody gets to ride that down. And that, to me, is very aggressive. They're cleaning up before they take it lower. 15-minute time frame. Let's see how we broke lower in here. Order block fills in the fair value gap, hits the bearish order block there, and the daily bearish order block. You see that sensitivity there? Remember that pink shade area, that's what that is. Breaks lower, returns back into the order block here, sells off, consolidates, institutional order flow entry drill, breaks lower, consequent encroachment, order block, sells off for liquidity. And that, my friends, is going to be it for this week. I hope you have enjoyed the teachings and lessons this week. I hope you've planned a very relaxing and restful weekend for yourself. I do indeed intend to have such a weekend for myself. And I think that, Lord willing, when we talk on Monday, I'll give you something in terms of a entry strategy. All right. And we'll work with that with institutional order flow. And until I talk to you then, be safe.